Today I want to talk about what Warren Buffett's secret stock could be. We'll take a look inside of the entire Berkshire Hathaway portfolio and look for hints as to what this secret stock could be. And finally, we'll dive into the numbers behind the company that appears to be the front runner for Warren Buffett's new secret stock. So if you enjoyed the video, drop a like down below, and if you want to see more videos like this one, make sure to subscribe. Warren Buffett is not only known as the greatest investor of all time, but also the CEO of Berkshire Hathaway, which is a conglomerate holding company headquartered in Omaha, Nebraska. Berkshire Hathaway not only owns publicly traded companies, but they also have a very large portfolio of private companies. However, most investors are paying attention to the publicly traded portfolio with over 40 stocks worth around $350 billion. And with a portfolio of that size, Berkshire Hathaway is required to file a Form 13F. This must be filed within 45 days of the end of the calendar quarter for managers with more than $100 million in assets under management. This allows for the public to gain insight as to what these super investors are buying. However, in certain circumstances, a manager can request to withhold information if the reportable security is likely to be substantially harmed by public disclosure. Often, these fund managers will do this to avoid people buying into their stock and raising the price substantially before they can build out a position. And in the fourth quarter of 2023, Warren Buffett filed for one of these exceptions, and this leaves investors wondering, what is the stock that Warren Buffett is purchasing? When we look at the activity from Warren Buffett's portfolio over the last couple of quarters, there are no clear indications as to what this stock could be. He's adding companies like SiriusXM, as well as expanding upon his oil positions in Chevron and Occidental Petroleum, and trimming positions like Apple, Amazon, as well as a lot of dividend type companies with Johnson & Johnson, Mondelez, and Procter & Gamble. However, when we look at Warren Buffett's total portfolio, we start to get an idea of where he is comfortable placing his money, and that is across the financial sector. Across the board, Warren Buffett owns a large range of financial related companies such as Bank of America, American Express, Moody's Corporation, Citigroup, Visa, MasterCard, Capital One Financial, and even a small fintech like Ally Financial. And this is something that Warren Buffett speaks to on a frequent basis. It's focusing on companies where you feel comfortable and you understand the business model. And he shows this in his own portfolio with a large focus on financial related companies as well as the oil and gas industry. These are two business models that Warren Buffett understands, and he can see these paths forward for these companies. He can see where they are headed in the future and how the business will capitalize on certain macro and microeconomic things that are occurring.
Defining your circle of competence is the most important aspect of investing. It's not how important, how large your circle is. You don't have to be an expert on everything. But knowing where the perimeter of that circle of what you know and what you don't know is, and staying inside of it, is all important. Tom Watson Sr., who started IBM, said in his book, he said, "I'm no genius," he said, "but I'm smart in spots, and I stay around those spots." And you know, that is the key.
With that in mind, there are a number of different analysts out there that are trying to focus on this circle of competence for Warren Buffett and finding companies that fall within that as the potential company that Warren Buffett is currently buying. And some of those potential stocks consist of Morgan Stanley. Another company is Federal Agricultural Mortgage. In my opinion, this company has too small of a market cap for Warren Buffett to be buying into it. And finally, another example of a stock that Warren Buffett could be buying is Aflac. He's already very familiar with the insurance business with the ownership that Berkshire Hathaway has in Geico. However, in my opinion, this is not the stock that Warren Buffett is buying. Personally, I believe that Warren Buffett is buying JP Morgan Chase. Berkshire Hathaway would have been buying the stock in the fourth quarter of 2023, which falls within this type of range. That means that the stock was trading anywhere from $160, $170 all the way down to around $135. $5. And for a company the size of JP Morgan to move up this substantially during the fourth quarter, it would take a lot of buying pressure from these super investors. And that buying pressure has continued into the first quarter of 2024, with the stock moving up around 15% so far this year. One thing Warren Buffett has touched on about the Berkshire Hathaway portfolio is how difficult it can be to find companies that will actually move the needle. You need to find companies that have very large market caps and then outperform the market, and that can be very difficult to do. JP Morgan, however, has a $566 billion market cap. What that means is Warren Buffett could purchase $56.6 billion worth of JP Morgan stock before he would hit that 10% mark where he has to make special filings with the SEC. And if Warren Buffett were to buy around $50 billion worth of JP Morgan Chase, that would make it the second highest valued position in the portfolio, making up a weighting of around 14%. And a position of that size would definitely have an impact on the overall performance of the portfolio, as JP Morgan Chase has moved up almost 30% since late November. And it's not out of the realm of possibility for Warren Buffett to own JP Morgan stock, as he has previously owned it. He sold out of his entire position back in 2020 with a lot of the concerns around the banking industry as well as interest rates and where they were going to go in the future. And even more recently, Warren Buffett had this to say about the banking crisis that occurred last year.
Some of the banks that you've sold include USB, Wells Fargo, Goldman Sachs, JP Morgan, PNC. Should we think that they're banks that aren't well run because you've sold them? Or?
No,
okay.
no. But I do think, I did think that banking could get in a lot of trouble just because of the kind of things that they did, and that I didn't like the banking business as well as I did before.
Why'd you keep Bank of America?
But I would love to have owned a bank. If Berkshire could have owned 100% of a bank, we'd love to own it. Well, we can't do it under the bank holding company.
Would you like to be a bank holding company?
Well, that means we can't do all the other things we do. So we got taken out of that in 1970. We had just bought a bank in 1969, and we had to get rid of it in 10 years. And there's, I don't argue against regulation of banks, believe me. But that particular option has been taken away from Berkshire, and I think it's probably a good idea to taking it away from corporate managements generally.
Why'd you keep Bank of America?
Pardon me?
Why did you keep Bank of America?
They invited, I invited myself in many years earlier, and they made a very decent deal for us, and I like Brian Moynihan enormously, and I just don't want to sell it. But I did sell banks that we'd owned for 25 or 30 years, and if they asked me why I did it, I told them. But and I like the people. I just think the system isn't set up quite right in terms of connecting punishment to culprits on something that's it's incredibly important that your banking system run well in the country. It just isn't going to work unless you have a banking system that works, and you don't want them to create periodic crises unnecessarily.
And that last point from Warren Buffett is very, very important about connecting punishment with the culprit. JP Morgan has been in a bad situation before where they have actually bought out banks and helped the overall system back in 2008. However, they were punished by the government because of what some of those banks were doing. And now we have seen this actually happen again, where they have bought out banks to help the overall system because they were asked to do so by the government. And I think Warren Buffett could be looking at this scenario that's going on as a repetition of what has happened in the past, and actually hoping that the government will see this and commend JP Morgan for what they are doing and not punish them for helping the overall system. And this is a prime example of what I'm talking about. Last year, JP Morgan stepped in and purchased First Republic Bank, which was going bankrupt. They were no longer able to support the deposits and their liabilities, and they were threatening to go under. And this was a huge threat to the overall banking industry, and JP Morgan was willing to step in and actually purchase First Republic. And this was good not only for JP Morgan, but also for the US government. And it's never a bad thing to have the US government on your side. Having a good relationship with the government is one thing, however, it's more important to continue growing the business. Here we could see JP Morgan's revenue. At the end of 2018, they were bringing in a trailing 12-month revenue of around $130 billion. However, at the end of 2023, that number had grown all the way up to about $240 billion. EPS is not as tremendous, but still very solid growth. At the end of 2018, having a trailing 12-month EPS of $9, that number has grown all the way up to $16.23 at the end of 2023. And Warren Buffett is also a huge fan of buybacks. We can see that in 2018, they were sitting around 3.4 billion shares outstanding. That number has decreased all the way down to around 2.9 billion shares outstanding. Right now, analysts don't have a huge amount of growth built into this stock for the next couple of years. In 2024, their average EPS estimate is $14.68, and this is actually down from a year ago of $14.94. They're expecting a little bit of growth in 2025 up to about $14.99 for their average EPS estimate. And right now, analysts have an average price target of $196.84 with a low price target of $160 and a high price target of $221. So personally, I do actually own stock in JP Morgan. I bought it back in 2020, and I think my cost basis is somewhere around $90 to $95. It's a very small position in my portfolio, but it's awesome to see how far it has grown over the last couple of years. And I do think this is a high likelihood of what Warren Buffett is buying. We have seen him own it in the past. The banks are starting to turn a corner, and with the lowering of interest rates, this should help banks across the board. But do not buy a company just because some random guy on YouTube talked about it. Do not buy a company just because Warren Buffett is buying it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. With all that said, I hope you enjoyed the video. If you did, drop a like down below. And if you want to see more videos like this one, make sure to subscribe. And as always, guys, have a wonderful rest of your day. And for the joke of the day, how do you find a good small cap fund manager? Check the comments down below for the answer.